Good evening, everybody. This is John Seville with your executive summary for stock setups for the 13th of November. So, of course, we've had a big break on the S&P 500. The open range was confirmed to the downside yesterday. Well, 2 days ago, when we had a 5-point break of the open range set for November, and of course yesterday followed through, and today obviously a big drop even further. So we're just bringing that up now. You can see that essentially we have a potential for a fairly significant drop here on the S&P. The open. If you missed the trading room, highly recommend you watch it. We reviewed this for about 30 minutes as to how we get to our calculations. But we're looking at a potential head and shoulders pattern, with this being the left shoulder, this being the head. So looking for a drop down to the 1800 level, then a possible rally up to the right shoulder around 1920, and then a drop all the way down to 1600. The possibilities we're looking at here. Again, a full breakdown in the trading room, but obviously some of the points that we made in the trading room was looking at HYG, looking at how the high yield bonds are dropping sharply at the current time, and money flow significantly negative. Pardon me, since where it's came from recently. And of course, that all ties in with the current concerning economic climate. So we've looked at a lot of longs here in the last few weeks, and of course, the one I mentioned last night, in the last 2 days, ECR, I bought $2.50 June calls, and I was very happy at how this performed today. It dropped down to $2 basically, and rallied 20% right off of that to close at $2.40. So it's held up extremely well in today's down market, closing in the top of its range. You can see money flow has continued to go higher, and so as a longer term play, I'm quite happy to continue to hold these call options, and really happy with actually how that performed. I thought this was going to be a real loser, but it's actually held onto that trend line beautifully, and there could be more surprises to come from ECR. So interesting to see, very interesting to see on this stock today. So OPK also has performed really, really well. The long that was from last week. This could be a short-term profit-taking opportunity here on OPK, given the sentiment of the market. It's rallied up nicely from around there at 980, 960 where we found it to $11 now. So nice profit, worth maybe clenching some. We can always get back in. I'm going to continue to hold the majority of my call contracts, but we'll take some profit on that tomorrow. So that's what we're basically looking at in the short term from those more recent picks. Now, the new shorts that we're looking at for swing trades. Of course, the big one announcements will come out in a separate email tonight. But for swing trades, trading room alerts, here's the first one, AER. Breaking down out of a pennant formation, so you can see there's as a trade, there's no earnings coming up. We've got the weakness here. So looking at the extension, you can see that we've got that drop from the pennant formation all the way down to $34. So that would be my target. I'd be happy to enter around these prices, and I'd be looking at that. That's the target. I'd be looking at $34. Now, there's no real insider trading on this. Nothing kind of no special ingredient. It's just a pure stock trade, or stock technical movement that looks good in my opinion. In terms of options, there's plenty of options traded on this. I mean, if you went out and had a look at, for example, April 2015, and looked at, for example, the 3750 puts, they're about 229. So that would be a possible way to play those. The $40 puts, $3.30. That would be the other way I'd play that. So that's basically the option side of that trade. So as I said, 3750s at 229, $40 are at 330. Okay. And just to give you a bit of an idea on if you went a little bit shorter term, if you went to January, which is I'd be quite happy to do. The $37, in fact, that might be more worthwhile. The 37.50 puts there only 75 cents. So was their last trade. So 75 cents could be actually worth the risk, I think, looking into January on AER. So just need to drop down. If we drop down to 34, we're well in the money, $2.50 in the money. So that could be a really nice return. Okay, and in fact, just a note there, 200 contracts sold today. Anything close to that was the 47.50 puts, which I think was sold 20 contracts. So there's 1,145 contracts open interest there. There's 200 contracts that were sold at that price today. So that could be the way to go. The January 37.50 puts. Okay, next, ANSS. Just popping up here on the screen. This one's looking like a Head and Shoulders. So I'd be looking at this as a possible entry here around 90.53. If it breaks 90.53, I'd be looking at a target of 87.03, which gives us a potential reward of $3.50. And I'd be looking at the stop loss at 92.13, which is a risk of $1.60. So we've got better than 2-to-1 risk-reward ratio here. So 2-to-1 would be 320. So we're basically, just better than 2-to-1. And again, if you have a look at the way that could play out, we could then get a rally back up and then an even bigger break to much more potential lower targets. If we look at the Head and Shoulder extension, that could take us all the way down to 76. So right here, where we're at $91, you could look at some, for example, they're quite expensive, but you'd be looking at, say, for example, $85. Have to look at the $90 puts, which are currently $4.90. That's a January expiration. If you were going to go for the more speculative type of, sorry, I was looking at the wrong contract there. 1 second here. No, there we go. So the actual January $85 puts are $3.80. Bid in the ask is at 205 and 270. So there's not a lot of volume on that. Let's look out to April. Yeah, so the speculators play here. If you looked at the April $80 puts are a buck 45, but not a lot of volume. Probably not a great option play on that one. Okay, next. LVS, mentioned in Trading Room. This is obviously Las Vegas Sands, one of our previous big one, number one plays. You've got a possible larger time frame Head and Shoulders here. You can see the neckline over these two lines, as well as a Head and Shoulders here. So we've got two Head and Shoulders within each other. And if we go to the monthly chart, you can also see we've got a Head and Shoulders there. So there's a few potential plays on this. A lot of those bringing them down to a significant drop. So this was also a trade of interest. I'd be looking at an entry if it drops below 45.47, and I'd look at a stop loss at 47.93. And from the short-term targets, 39.13 would be my first target around here. But then that could just drop all the way through to as low as $30.13. So that's the stock targets I would have, and so therefore, kind of looking into the options, I'd be looking at the $40 puts as the way I'd play that. And so again, I'd look out, for example, to March, and the March $40 puts are currently $1.77. Okay, so but $1.77 is where that's currently trading at. Okay, ROK, This one I like a lot. I mean, it's got a lot going on for it. I mean, it's got it's the industrial business, automation company. If you have a look, it's just got this kind of key support level that it's coming down on, and I just have a quick look here at the. Yeah, so there's your significant insider trading. There you go, right there. So quite a big chunk, all coming out here around the $126 price. It's only at 102, and 118. Also some insider selling. So this kind of grabbed my interest, and you can see the way it's just kind of curling over very sharply. And that money flow going negative. So I like this one on Rockwell, and I'd be happy to short it anything under 104. Might get a bit of a rally back up tomorrow. I'd wait to see how it acts after the entry in terms of determining a stop loss, but this looks like soft support, and looks like that might just break through. Going back to have a look at some of the previous support levels, you can see very aggressive here, less aggressive here. So I expect it'll be a soft bounce and then a breakthrough, and that could be a really exciting drop if that was to then occur. Now, in terms of looking at a target, we can look at a Fibonacci extension from these two levels, and you can see that we could look at a 38.2 Fibonacci, well, 22.3 would be a drop to 92.74, so we could pick up at least 10%, but even lower, looking at 88. And then a kind of an 81.67. Going back to have a look at the history of this company, you can see how that lines up with previous key support levels. And you can see that's where that 61.8 comes in. So I think there's a good shot that if this were to break down through the $100 support, which I think it will, we could be getting looking at a drop all the way down to about 83. So there's about a 20% potential drop there from around the current price down with a target of about $83. Okay, so in terms of looking at possible options as well, that is an option. So we'll have a look at that. Go to ROK. There we go. I did push enter. Come on. Go have a look at April. Have a look at where those some of those are sitting. So basically, if we're looking at it, maybe a $90 put, it's currently priced around $3.15. So maybe go a little bit higher than that. Maybe look at a $95 put, which is sitting at $4.10. Okay, and then the last one for tonight, SABR. I do really like this one, probably my favorite of all, just because it's so, it's just moving so well with all of the different type of scenarios. It's got a bit. Here we go. It's really long-term trend line. It's just coming into breaking that down. It's also a head and shoulder. I mean, a rising wedge formation. This will be the first, second, third touch, or fourth touch if you count that. It's got big insider selling. We'll just have a quick look at that. You can see. There we go. So there's your. Go to SABR. There you go, big insider selling, really, really big. So I really like this one. I think this is going to be a very interesting play, and this could have like if we look at a breakdown of the kind of the length of this, we could be looking at a break for about that much down to the $24 price zone. We'll have to, it's kind of going to be a bit of a wait and see to see how the trade develops and what kind of pattern it turns into. But yeah, look, this has ample opportunity of dropping at least $6. It could be 20-30% type of move. So yeah, I like this one, and so I'd be looking for a breakdown. Now, taking a look at the puts, it looks like the best spread's going to be the $30 puts in April, which have got a spread from 270 to 310, a current ask of 285. Now it's already in the money, obviously, by $1.50. So you're paying about $1.30 premium on that. I think that's a reasonably well-priced option. So especially if it drops now, another $5. That could be a 200% return if it's short term. It could even drop a lot more than that. So SABR would be a play I also like. So that's your executive summary for tonight. Make sure you check out the full recording of Trading Room for a very juicy breakdown on this very slippery market. Happy trading. And of course, if you haven't signed up for the next big one, we have the brand new big one course launches. The first recording will go out tonight with our new alerts. We've got about 5 very, very, very sexy setups. And then we'll have an official class next week where we'll teach you how we found them, as well as have a couple other setups as well that we're going to put some money in. So with that, if you want to sign up, it's acornwealthcorp.com/big one. There it is on the screen, acornwealthcorp.com/big one. And that class will get you access to all of our updates, all of our alerts, and all the positions we get in and out of for the rest of the year. And so it's not just a one-time thing. You actually get access to the rest of the year, and that'll include a class next week, regular updates, and another full-on class in December. So lots and lots and lots of value, and let's take advantage of this, probably what will be another very big drop. So well worth it. Hope to see you all there. Happy trading.